If you earn money through YouTube, OnlyFans, Etsy, Shopify, or any other online platform, the CRA knows about it. And if you haven't reported that income, you have a problem. Gig economy tax in Canada is no longer a gray area. In this video, I'm going to explain how the CRA is now collecting platform income data automatically, what your obligations are, and your options if you haven't caught up. Hello, I'm David Rotfleisch, a Canadian tax and business lawyer certified by the Law Society of Ontario as a specialist in taxation. Welcome to the Tax Page Tax channel. Here's what changed. Canada now requires major digital platforms to file annual reports with the CRA listing every seller's income. 2 full years of that data, 2024 and 2025, have already been filed. That means the CRA has a structured record of what you earned. Before any audit even starts, if your tax return doesn't match what the platform reported, that discrepancy is flagged automatically. Every dollar you earn through a platform is taxable. Whether it's cash, gifted products, sponsored travel, or cryptocurrency, if a brand sends you $2,000 worth of products in exchange for a post, that's taxable income at fair market value. If you're paid in Bitcoin, you report the Canadian dollar value on the day you received it. And don't forget GST/HST. Once your combined platform income from all sources hits $30,000, you're required to register. If you drive for Uber or Lyft, there's no threshold at all. You must register from the very first dollar. The CRA matching systems find the gap automatically. Common triggers are bank deposits that are higher than what you reported, or a social media presence that looks inconsistent with what's on your return. If you were grossly negligent, the penalty is severe. The penalty can be 50% of the tax you underpaid on top of the tax itself, plus interest. The good news is that if you act before the CRA contacts you, the Voluntary Disclosures Program can substantially reduce your exposure. An unprompted disclosure filed before the CRA contacts you can eliminate all penalties and reduce interest by 75%. Wait until after the CRA makes contact and you're looking at a prompted disclosure. Interest relief drops to 25%. But once a tax audit commences, the voluntary disclosure window is normally completely closed. A well-structured voluntary disclosure handled by an experienced Canadian tax lawyer can in most cases avoid prosecution entirely. The window to act on unprompted terms is open right now, but it won't stay open once the CRA contacts you. Contact one of our Canadian tax lawyers at taxpage.com. We are here to help.